Since we work with rural families and their livelihoods, there is high dependency on natural resources. And this is where we start seeing the impact of climate change on their lives very, very closely, right? It's almost an everyday affair, if not seasonal, at how it affects their livelihood. So whether it's changing rainfall pattern, the changing duration of the dry spells and the wet spells, the increased pest attack, the nature of soils are changing. There is the moisture content of the soil changes, and all of these collectively impact. These are very minor factors, but they are all heavily contributors of the loss of production. Droughts and flash floods and all of that toppled with it. NTFP is another source of income where rural communities depend on. And with changing climate, the quality and the quantity of production both changes and significantly impacts the overall livelihood portfolio of a rural family.
Every which way, energy is generated and consumed by us at every moment. So what's the footprint of that? And really, how do you really kind of reduce that going forward? And what is it that we can enable through a solutions-oriented approach? So SET essentially looks currently at the power sector and seeing as to how can we really kind of bring about a solution wherein it works for people and renewable energy doesn't really make the mistakes what has been made by the fossil fuels. We use a venture philanthropy approach to identify early stage organizations or new projects within existing organizations and try to give them seed funding so that they can really kind of grow the program. And we hope to really support them for the next 5 to 7 years before we really bring in an exit. An exit for us as a philanthropy would mean getting in a bigger, either a philanthropy or an actual private capital to take our organization or our project and give it the scale it deserves or the scale to which it has grown. And in that process, we really provide a lot of organization development support as well, which could include everything from executive coaching to leadership trainings to even legal and financial compliance and such. Right. So that's something that we really look to support as core with our grantees. But let me just go back to the initial point that I mentioned, that we should really see climate change as an opportunity, not just as a threat. And once we start to see that, we should see it as a more solutions-oriented approach that philanthropies, venture funds, public institutions, and even the bilaterals should come together to support.
Most of our companies would somewhere be in the climate mitigation and climate adaptation kind of thematic areas. So we are looking at energy efficient data centers. We are looking at, a company in analytics, which is helping corporates to sort of decarbonize the supply chain. We have an investment in an agriculture company, which is into, and I think Dhruvi mentioned it earlier in the beginning, where how farmers are looking at, resistant seeds or climate resilient kind of seeds or a seed bank. So this company exactly kind of, produces those kind of, seeds, and that's how we sort of, play in the climate adaptation space. In terms of using these seeds, are we able to kind of reduce the water consumption? Are we able to reduce the dependence on pesticides or agrochemicals beyond a certain point of time? Are we able to increase the yield, or farmers are able to increase the yield? So these kind of products is what the company is into. So I think the climate mitigation and adaptation space, and I was reading somewhere, I think just in the South Asia region, the opportunity is almost as high as $1 trillion. So if we look at the kind of capital that is required to sort of mobilize the entire climate action, I think it's immense. And I think Vikas rightly pointed out that it's a huge opportunity in front of us, both short-term, long-term, and all kinds of capital is required over here. I don't think we can pick and choose what capital is required. I think all kind of capital is required. Most importantly, the need for all kinds of capital to coexist with each other, because there will be businesses that will be in different stages, some at early stage, some at growth stage, some will require a grant, some will require a fund like us to come in. But I think that's a huge opportunity, and therefore I think this entire market, this entire sector is growing, and we are kind of looking at businesses and opportunities, obviously, which have a perceived economic interest, right? Like the whole thing about private equity is, how much sort of, I saw a question like, what kind of returns do you sort of expect, once you make an investment? So private equity certainly looks in terms of businesses where that kind of opportunities to maximize returns is there. Now, it can differ a little bit from sector to sector. Some sectors, some businesses are mature enough, which can give that kind of economic benefits or economic sort of multiplication, wherein an equity or a fund like us can comes in, some which are not. So I think at some point there will be a sort of a chicken and egg situation, that if there's no capital, how do we grow? And if there is no growth, then how can capital flow in? Which is something which we'll need to straddle that. But I think renewable sector is one key area in India in the last 10 years in terms of how it has grown from looking at government subsidies, looking at taking in certain benefits, and that was the driver for the entire renewable sector. To today, all of institutional capital, the endowment funds, pension funds coming and putting in money in the renewable sector. So I think that's just one example. We can talk about many such examples, but largely this is what GF Capital does. We do kind of look at opportunities and businesses in this space to fund, to grow, to kind of support the company in terms of expanding their business, and at some point and at a given point, exit at an appropriate value and look at other opportunities again.
So this whole negotiation between CSOs and the donors and the communities is taking away a lot of time and energy for similar outcomes that we all desire. So that's where a skill gap lies, right? In trying to understand what is ultimately required for the community, and how are these boundaries actually limiting the efficiency and therefore the speed of doing what you're doing, right? Because you're unnecessarily spending a lot of time negotiating in these boundaries that have been created. The second level of challenge that I see is that it's an encompassing area. Yet in education, we don't talk of climate impact. In health, we don't talk of climate impact. So it's very important to integrate all of this. And that's another HR gap. And this is mostly due to HR gap in understanding what the issue is. The third and the most critical human resource gap is at the level of the community. Right? How much are they able to articulate? Do they have the right tools? Do they have the right knowledge? Is it reaching them in time to be able to articulate what they are facing in the context of climate change? And that's a large space of challenge. Technology seems to be a good solution to address some of these, and I think COVID nudged it, where internet is now accessible in hinterlands. There are platforms that allow faster dissemination of information. And I think, at least I'll kind of just talk about the CSR funded space and not even the philanthropic capital, because the uses can now be very different and they all complement each other. I think as funders with an intent to influence climate focused programs, a lot more conversations are necessary. Collaboration does not mean you do the same thing. Collaboration means you acknowledge what the other person is doing. And I think all the funds that we spoke of or heard of today have the potential to accelerate if they complement each other and understand the complementarity. And there is a gap in human resource across. And to be very honest, I think climate change is not a very complicated issue as we've kind of made it out to be. So I think some amount of simplification there will help all of us adopt the problem much faster and therefore solve it.
Every organization will have its own challenge depending upon the space in which it operates, right? Of course, there are two kinds of challenges. One is, of course, their programmatic challenge in which they operate. And the second would be more managerial challenges, right? So The programmatic challenges are specific to the space in the climate wherever they operate, whether they happen to be an organization working on policy or an org working on, say, energy finance, or even on something like communications, right? So they have their own specific issues around their projects, which could be, they would need support on or capacity development on. And for that, you really kind of connect them to the right either consulting partner, or in that maybe some kind of an individual coach, or in some instances even companies who have done that or solved that problem at a different scale. So that's one where you can support. And the second is are those managerial challenges, and they could be anything from lack of second line of leadership. They could be about having the right set of hiring practices, or where you kind of, how do you even decide as to what talent do you need, right? What kind of a background do you need? Let's face it that the while of course people have been working for almost like a couple of decades on the issues of climate, maybe more, the talent crunch in the space is real, right? And we face it every single day. So how do you really define the job profiles which are flexible enough to accommodate as to who is in the market, and to be able to absorb them into the fold? And then, of course, the whole issue of, as I mentioned, the legal and financial compliance, because let's face it, as NGOs, as CSOs, there is always that extra level of scrutiny which is there on legal and financial compliance. So you've got to be on the right side of the law, and to make sure that you are doing what is required of you. And whether it is the domestic funders or the domestic NGOs, or foreign funders or foreign NGOs, the law in this country is the same for everyone. So you've got to be able to kind of comply with that. So I think these are the broad areas around which I feel that the support should be provided by funders wherever possible.
One example which hopefully I'm not proven wrong, is that we have been working on a project of trying to link climate resilient agriculture with the capital markets. And there are two FIs who have done very small transactions which have some relation to this. One is an NBFC funding some agtech companies, and the second is Samunnati, which has issued green bond with some resilience, and they make a reference to our standards. Hopefully, you will soon see some off-takers of and large off-takers of agro products also coming up with bonds in the market, which is about climate resilience applied to agriculture. And how does one evaluate that? So what we have done is we created something called the climate resilience principles for the investment fraternity, and then have socialized it with KPMG, DNB, JL, and a few others who can give a second party opinion that yes, based on the climate resilience principles, this is the operation and this is the asset backing the bond, and therefore we can with certainty say that this bond is a resilience bond. Resilience, the IPCC recent report talked about a lot, and to some extent we'll have to rely on it. Some warming has happened and some will surely happen, whatever we do. So this is something which we should be expecting fairly soon. There are 4 or 5 fairly large off-takers, and the significance of that will be that a lot of people, including many in the financial industry, think that resilience is necessarily a government goal. There is no resilience asset. It is just not true. And there are some other deals in the pipeline. They might be very small, and resilience is far more tricky than mitigation. Greenhouse gases are getting lesser. That's easy to measure. It's far more tricky, but we have been able to make something which is quite fuzzy, and we are talking actively to bankers about a pipeline of deals. So hopefully you'll see one large one there, and once that large one is there, then the market knows, oh, this is a resilience asset, and then they start finding in their backyard. Okay, let me try to find one more. So hopefully this happens very soon, and you'll see a class of resilience assets for the country. And of course, there are many other classes of assets. Solar and wind have gone down, become cheaper, and the utility scale has done its job. There is the distributed renewable energy, which is open access contracts and rooftop solar, which due to a lot of policy flip-flops, haven't got up to that scale. But battery prices are likely to come down, and that will create the scale up, and then we create the certain links to the capital markets. The EVs, the EV ecosystem, and also the hard to abate sectors, all of them are in that way.
Let us also understand from Ms. Rupa about when it comes to the bank's work in this space, like what has been the targets and focus and the challenges that you see in the work that you are doing at IndusInd.
One of the important things in this space is bringing together different providers of finance and capital, because there are a host of they're different on the risk return spectrum. There are different investors with different perspectives. Commercial banks are on one side, and you have higher risk takers on the other side. You have people with more social or environmental kind of agenda. On the you have philanthropic money coming in. On you have development finance institutions. You have commercial banks. You have private equity lenders. So impact investors. The different types of investors. Everybody is placed differently on a risk return sort of spectrum. So from youngsters who want to join this space, I think deal making abilities to be able to stitch up a deal, knowing who's doing what in the ecosystem, and being able to stitch together very intelligent deals will be very useful for innovators, because it's very difficult running across all these types of capital providers for the innovator. It's very difficult. Because on the one hand, he has to look at his product, technical aspects of it. On the other hand, he has to look at scaling it in terms of businesses. And the biggest challenge is, again, financing. So if there are, a breed of youngsters who can cover this, it's an unexplored area. Not too many people are doing that. That was one. Second thing is, in terms of opportunities for youngsters, ESG risk, there's so much confusion around this whole thing. What is as the economy transitions, what is ESG risk? When for a company, how will a transition into a low carbon economy impact various sectors, companies in various sectors? There is very little knowledge about this, because it's quite a technical topic. The cement industry, the impact is different. It's different in iron and steel. It's different in banking. From a banking perspective, for example, I can say that banks will be foxed with understanding what is the impact of climate change on their portfolios. How will, what is a stress test on your portfolio? Which of these guys will, survive? Which of these guys will go down? And corporate India is also transitioning. Everybody is greening their operations. So how do you change your portfolio composition so that you're well prepared as the economy transitions? And combine that with sectoral understanding of how this momentum in the world is going to impact certain sectors. What is happening in plastics, and what are those guys doing there? And what is happening in telecom? How is that industry transitioning, and what are the risks there, which are high risk and low risk industries? A lot of consultants really are getting richer by the day because everybody is running to them saying, "Give me my strategy for sustained moving to in a ESG world. how does one, strategize? So I think it's a very interesting space. The risk involved in this whole thing. So that's the other opportunity. So if you're a business-minded person, I would say go to products and structuring and deal making. That's also going to be a huge space because of multiple investors, like I explained. Or if you are analytical and risk-oriented, one can go towards this side and deep dive into sectors and become sectoral experts. Agriculture, Raki again spoke about it. In fact, it's going to be phenomenal because it's an agrarian economy at the end of the day with so many lives at stake. So how is agriculture going to tackle with this problem? So very fascinating, I would say. On the people side, on the other question was on the business side, what risk do you see? For banks, especially in climate finance, why don't we fill up our book with climate, with green assets, for example? Is because inherently you have some risk in this portfolio. It's a very long tenor sort of call that one has to take, and our source of funding is short tenor with public deposits, so it leads to a considerable mismatch. Secondly, the sector is very dependent upon government policies. Vikas mentioned, multiple changes, etc. So one has to closely align oneself. Which thirdly, DISCOMs, experience of banks dealing in DISCOMs has been, really bad in the last infrastructure cycle. So as the, spends are increasing now, which states to bet on? While SECI and NTPC had come in, there is increasingly a tendency now to, go back to back with the state and the DISCOM of that state. So understanding ability to read these clauses, these power purchase agreements and stuff like that, they're fairly complex agreements to be able to read, understand what is the impact of termination clauses on projects that you are financing, and how will you get out of those, if things go bad. Because at the end of the day, you're talking about nature. You're talking about how much wind will come. It's only like an estimate, right? You can't 100% get it right. And we have not got it right. Many wind projects where they estimate in the beginning have been very different from how it has played out. Solar is a little less risky in that sense. Wind has been a little bit more erratic in understanding, or very accurately guessing cash flows from the projects, because we're looking at very long tenors. So these are some of the risks, and so inevitably banks are going to, have caps on sectors, and so the ability to sell down these exposures or to partner with, like I said, maybe a different bunch of investors with with very long-term perspectives. That you have pension funds with very long-term perspectives who are happy to come in and take operational projects. So, which is why we have seen in India large companies issuing green bonds. Because as the project operationalizes, we are able to move that into the foreign currency sort of green bonds, which where the funding or the investors which it attracts are very different types of investors, and not typically commercial banks who are saddled with this ALM mismatch, as we call it, an asset liability mismatch on our balance sheets. So these are some of on the ground sort of constraints. Because of which the sector keeps complaining that bank funding is not enough. But traditionally banks have supported more than 50% of the capital required for this sector, the debt required. Because equity is broadly about 20-25%, and the rest of it comes from debt. And these are large capital intensive sort of projects. So 75-80% is debt funded, of which 50% comes from banks. The government has also, of course, set up firms like IRIDA, PFC, who are now underwriting more and more projects. But everybody's balance sheets are getting choked. We need more of these. Maybe we'll need a green bank. So regulatory support is also needed in this space. Maybe more funds coming into this space to increase the liquidity and capital flow